Hey, what's up, family? It is your favorite uncle, cousin, Tyrone Gregory, back at you again with another video. And yes, I am excited about this video. And I know I say that about every video, but this one here, I really am excited about this video. And here's why. Because of as of the recording, today is January 5th, 2019. So we are fresh into the new year. And as you know, it is my only goal as your favorite uncle cousin to be able to equip you with enough knowledge and resources so that both you and your business can just skyrocket into success, which is why I'm excited about today's video, because I found somebody who is extremely intelligent, extremely smart. They are an accountant, an actual CPA. And she has been gracious enough to come on, take some time out of her schedule to actually allow me to ask her a few questions for me to pick her brain, so to speak, to help give us a little bit of context and some very important information about what we need to do on the back end, on the administrative side of being self-employed and handling taxes. So again, I know her calendar is already booked. As a matter of fact, I know it when I asked her, but she still said, yes, let's do it, because she shares the same passion for the self-employed community that I do. So I am grateful that Keila decided to take some time out to come on here, and she really dropped some nuggets of wisdom on this. She really dropped some jewels. That's why I'm extremely excited, because I learned a few things. I'm hoping that you'll learn some few things. So without any further delay, let's go ahead and make sure that we get to this video so you can see exactly what you need to do when it comes to accounting for your small business, because that's what we're going to talk about. So again, thank you, Keila. Thank you for being there. And remember, if you have any questions for either myself or for Keila, make sure that you leave a comment below. I will forward this information to her. She was gracious enough to leave her contact information, so you can check that out there. And if you aren't subscribed to the channel, make sure that you subscribe, because you'll be receiving a lot more of this good information coming your way. So you know I love you. I know you love me, because you've shown me nothing but love, and I appreciate that. So let's make this year our best year ever, and enjoy the video, and I will see you in the next one. Alrighty, family. So I am very, very honored and extremely happy to have this particular special guest with us here today. She is my good friend, my good sister. She is very smart, as you are about to find out, very knowledgeable, and she has agreed to come here and be a guest and allow me to ask her a few questions so that we can get a good understanding of everything that we need when it comes to being self-employed and dealing with taxes and dealing with accounting. So let me allow her to introduce herself. My sister, please, you now have the stage. Just say hello to the family.
Hi, everyone. My name is Keila Hill-Trawick. I am the owner of Little Fish Accounting. We are a boutique tax and accounting firm in the DC area, but we serve clients across the country. And we specifically focus on entrepreneurs, freelancers, solopreneurs, and tiny businesses. So any business that has a very small number of employees or contractors, we are here to serve your accounting and tax needs.
See that? That's why I had her on the show here. Here we have an actual accountant. Now, she being humble, talking about herself. She is a CPA. Right. Yes. Yeah. Very there. Has her master's in business, has worked for the government. Don't tell nobody, the government, they're always listening. And again, like she said, she has her own accounting business, Little Fish Accounting. Even though they deal with the big fishes, they send them out there with the sharks and they don't get bit. So I'm glad to be able to have her here on the show to help us as small business owners, as entrepreneurs, understand the importance of the back end, the importance of the things that we normally don't like to focus on, because as entrepreneurs, we do one thing, and that's what our passion is. That is our craft. We don't really worry about what's going on in the back end. I actually heard somebody say that Well, the quote was, in order to determine their profit and loss, that they would just stick their hand in their pocket and whatever comes out, that's their profit. And I'm like, okay, if that works for you, then, but again, me being the self-employed tax guy, it is my goal to ensure that for those serious entrepreneurs, again, not the ones who are just trying to save up and they got the side business going because they want to go to Montego Bay and to Jamaica, but for the ones who are depending on their business for their livelihood, we have to make sure that we establish a solid foundation. So I'm very honored to have my sis here with me to help answer some of these questions, especially from an accounting perspective. So I have my list of questions I'm going to ask. So sis, are you ready?
I am ready.
I am ready, man. So starting with the first question, in your opinion, as an accountant, so everything I'm asking you is going to be as an accountant, right?
Yeah.
What is the importance of actually keeping track of everything?
Well, a lot of people think that it's just for taxes, and it's really important on that front, right? Like if you want to have a smooth tax season, one of the best ways to ensure that is to make sure that you have everything in order, that you have things categorized properly, that if you have to pull a receipt for it, you could. If you needed to have support documents for something, or if you wanted to make a purchase or not make a purchase toward the end of the year, trying to figure out whether that works best for you tax-wise, you need to know where you stand. But really, the bigger reason is because you can't make strategic decisions if you don't know where you stand financially. And so one of the comments that I hear all the time from clients and potential clients is, I can't afford these things. And a lot of times the reality is you don't even know if you can afford it. You have no idea how much money you make and how much you spend running the business. One of the examples that I give a lot is people will spend money on Facebook ads and Instagram ads. And they are a cheap way to get your message out. I am here for them. But do they result in revenue? If you haven't looked at your books, you don't even know if they work. Wow. So you're spending all this money on ads, and the next month comes up and you don't know whether or not you should keep doing that because you don't know if you made money from the last time you did it. And so that's really a big focus. One of the other points that I like to make is a lot of entrepreneurs get into a place where they think, I'm trying to start. I know I'm going to have to bootstrap at first, but then I'm going to get VC. Somebody's going to invest in me, all of these things. Nobody is investing in you if you do not have financial statements. You cannot go to people and say, you should give me money, because just like stuff like Shark Tank, they're going to say, how much money have you made? What is your operating profit? How much are you, how many units are you moving out? And if you pulling your hand out of your pocket and saying, I have money, you are making it clear that you don't know the difference between income and cash, because they're not the same thing. And so having an understanding of that just puts you in a better position to be able to speak intelligently about your business and to be able to make strategic decisions going forward about how you want to scale and grow the business based on the numbers that are in front of you.
Wow. I mean, man, I'm going to give a hand clap right then and there, because just in that first question, man, it really brought a lot of light to things. Just understanding, you even said some terms, that must just be accounting terms, operating expenses and units. I'm just curious as how many people really know and understand the importance of just knowing that, just that little bit right there, how much that would actually increase your business, how much that would actually give you the ability to grow. Just knowing that little bit of information right there, man. So thank you so very much for really dropping that on us just off the gate. Wow. Yes, what I'm talking about. So my next question is, what is the difference in your opinion between bookkeepers and accountants? Because I know each one is different. Each one have their own use, I guess, or purpose, right? So you being an accountant, but you also offer those bookkeeping services. What is the difference?
So a bookkeeper doesn't have to be an accountant, and not all accountants are bookkeepers. So Little Fish serves accounting and bookkeeping needs, but there are accounting firms that don't deal with bookkeeping, and there are bookkeeping firms that just run your books. And so your bookkeeper is going to do your day-to-day. They're going to look at your transactions, make sure that they're categorized properly. If you have income that comes in, they're going to put it to the right customer. They're going to make sure it's in the right revenue stream. They're going to apply it to the right project or puzzle piece of what's going on with you. Same with expenses. If you have a bookkeeper and you have an expense, it's going to come in. They're going to put it in the right place, make sure that it's coming out of the right account, and that at the end of the day, everything balances out. Your accountant is generally going to take the information that your bookkeeper has put together and make analysis decisions for you. They're going to look at your financial statements based on the information that the bookkeeper has put in transaction by transaction. Your accountant is going to pull your financial statements and say, okay, I see that you have this much in advertising expenses. That's a little high compared to last month. Did you do anything differently this month? They're going to look at salaries to say, hey, last time we talked, you said you were going to hire a couple of people and it was going to cost you X. This looks a little bit above that. Was that something that you were expecting? Is that a new cost for you? They're really going to go through all of your financial statements and talk through what that means for the business, whereas your bookkeeping is more transactional. It's just making sure that everything is in the right place. And I don't want to minimize that. It is a very big piece of your puzzle. A lot of people think that they can do bookkeeping themselves. You can. You likely do not have time to. And so it can be very tedious, especially if you don't keep up on it. But having that in place makes for a simpler transition, even if you're looking at your financial statements before you get to your accountant, to have a sense of where your business stands.
Oh, wow. Okay. Good point there. I mean, you say people can do bookkeeping. And I know a lot of people, being a tax professional myself, the bookkeeping I see a lot of people do is either a shoebox or a bag.
Yes.
A
wrong Excel spreadsheet.
Yes. I mean, I'm grateful if I get an Excel spreadsheet. I am, man, when I get customers that come in and they at least try to organize it on paper, man, I really get up, give them a hug and a kiss, because that's appreciated. Because most everybody else, the bookkeeping happens, like I said, in one of three ways. It's either a shoebox, a grocery bag, or they're looking up at the ceiling tiles, right, guessing at numbers. So it's good to know that, and it's good to know the difference between bookkeeping and accounting. So I'm really glad that you brought that out there. But you mentioned something which is going to be segue into the next question: financial statements.
Yes.
Right. So the next question is, what is the first? Let's talk about the financial statements, what they are, and then what are the most important financial statements that every small business should know, and why should they know it or focus on it?
So your two main financial statements that you're going to want to look at are, one, your balance sheet, and two, your income statement, or what's also known as your profit and loss or P&L statement. Okay. Now, they give you two different sides of what your business is doing. Your balance sheet is going to tell you where you are at a specific point in time. It is not a range. It is, if I pull this on December 31st, this is where I stand on December 31st. And your balance sheet lays out two very important components of your accounting system or your accounting transactions, and that's your assets and your liabilities. Your assets are what you own. Your liabilities are what you owe. And so it's going to tell you at this point in time how much money you have in the bank, how much inventory you have, how much equipment you own, any automobiles or buildings that you own. It's also going to show how many loans you have outstanding, how much credit card debt you have, any expectation of work that hasn't come in yet, or on the flip side, what we call unearned revenue, which is where they've paid you for work, but you haven't done it. So your balance sheet on that day is going to say, this is where my business stands. This is what I owe. This is what I own. It's also going to give you an equity side, and that tells you the ownership side. That can be stock. That can be loans from the owner. That can be money that you've paid yourself, things like that. That's all going to be on your balance sheet. Your income statement or your P&L is the one that gets all the attention. And the reason is because it literally tells you whether you're profitable. Your P&L statement has your revenues and your expenses, and then the difference is whether or not you're making money. And so you're going to see all the money that comes in from various income streams, and you're going to see all types of expenses, whether that's what it costs to run the business. If you sell products, it will be expenses like shipping items. Actually, your cost of goods sold are going to be an inventory on your balance sheet. But you'll have, if you have to ship something to a PR company, those kinds of expenses. If you have contractors that you pay, rent, any of those items are going to show up on your P&L. And the reason that that is really important is because, one, it can essentially tell you where to cut. Okay. And so if you see that you're at a loss, that you're not making money, you can see where your expense categories are high. You can look and say, whoa, it seems like I'm spending a lot of money on food. Is that where I want to be spending? And it'll kind of guide your budget and how you decide how your business should operate on what terms and what word am I looking for? Basically how you want to allocate. Because you have a better sense once you see how much everything is costing you, how much you think things should cost. The other point that I'll make, because I said a piece to this earlier, cash and revenue are not the same thing. And one of the ways you know is because they're on two separate financial statements. So your cash is on your balance sheet, your revenue is on another. But the reason that I bring that up is because if you make $1 million, but people haven't paid their invoices, you don't have $1 million. You have what people have paid you. And so that gives you a good insight too. If you look at your revenue and you're like, my P&L says that I made $1 million this year. How come my bank account only has $10? You might want to look at your accounts receivable and see how many people owe you money, how much is overdue and how much is just, it's not supposed to come in yet. And so the main reason that these are important goes back to kind of the first point that I made, which is that this tells you where your business stands. This tells you whether a revenue stream is profitable. Should you keep selling that product? Because once you pull your P&L, you'll see that that one's not making you no money. And maybe you need to reinvest that attention and those funds into the line that's really getting all the customers. That will tell you kind of how you need to make strategic decisions going forward.
Oh man, so just two, right? The balance sheet and then the income statement, which we know it as the P&L, the profit and loss, right? Right. But it sounds like the profit and loss tells you more than the balance sheet, because you can really look at that one and say, like in the example that you just gave, hey, I have $1 million, but my bank account only shows 10. Now, do we get that specific information by looking at the profit and loss, or do we really need a combination of both the balance sheet and the profit and loss? Okay.
You really want a balance of both. The first and the reason is kind of in the time period. So a P&L could show you a whole year's worth of activity.
Okay.
But your balance sheet is only going to show you today. And so if your balance sheet has $1 in it, it doesn't tell you that you made $1 million and then you spent this much in expenses. It just says this is what I have in the bank left over. Okay. So you really want to look at both of them, your balance sheet to say, okay, here's where I stand right now. That looks accurate. And then your P&L to say, this is what we've done over the past quarter or over the past year. And it can really inform more of your future decisions, whereas your balance sheet says what is realistic for you right now.
Okay. Now, will there ever be a time that the P&L and the balance sheet don't match? Or at least
there will be times where one is stronger than the other. And so, for example, let's say you have a business that's buying and selling goods.
Okay.
And you've bought a lot of stuff and you've invested money in it, but you haven't actually sold anything yet.
Mm-hmm. Which is
your balance sheet is going to be strong. It's going to say, I got money in the bank. I have inventory. I don't owe anybody anything. We are good. Your P&L is going to say you haven't made any money. It's going to say you've had all expenses, but no money has come in. And so depending on where you are in your business and what you're trying to reflect, one statement may be stronger than the other. On the flip side, your P&L may show you were super profitable this year, but then you look at your balance sheet and there's no money.
Okay. So just don't, I guess there's no cause for alarm. If somebody has both and yet and still like, oh, my balance sheet, I'm good, but the P&L, like, oh, Lord Jesus,
Right.
so there's no cause for alarm there. But then again, it almost could be cause for alarm. If you're not showing anything, but you have all these things on this sheet, it's something to really pay attention to.
Right. And
okay.
It may tell you that you're inputting something properly, that your bookkeeping is not going as well. Because if you look at your profit and loss and you know you've made money and your P&L says that you've lost money for the year, that may be an indicator to you to say, wait, let me go in and make sure my revenue is being recorded correctly.
Right.
Let me go in and make sure that I'm counting, that no expenses are being double counted. Let me make sure that the number that's being reflected here is actually accurate and reflects what my business is doing. And that's another reason why your bookkeeping is so important, because if you miscategorize things, if you are not going back to say, this is this type of expense, or I paid this month, it came out of my bank account and I paid it, then how do you know whether you're profitable or not? Now you have expenses that you didn't even count. So you may look like you're profitable on paper, but there's all these expenses that you didn't count in your accounting system that have come out of your bank account, but they're not showing up.
So that's where the whole reconciliation process comes in at, right? But let me step back a minute, because you mentioned a couple of times being able to categorize these expenses. Now I'm just going put my little accounting knowledge out here, because I read, Accounting for Dummies or something like that. I've read. Is that the chart of accounts?
Yep.
See, I know a little bit of something.
Yep. So your chart of accounts is your listing of all the accounts that your business uses. And that's everything from, this is my bank account, this is my credit card, to this is advertising, this is rent, this is employment expenses, these are taxes, all of those. And then you can have subcategories within those. So let's say you have a tax category. You might want to see specifically how much you spent paying sales tax versus how much you spent in estimated taxes throughout the year. But basically, your chart of accounts lists out every category that a revenue component or an expense could be categorized into. And then those are going to be reflected on your financial statements.
Man, I've heard the chart of account is probably the most challenging thing to put together when it comes to bookkeeping, because once you have that, everything else, like I said, is pretty much the entry point. So
and it doesn't have to be as complicated as a lot of people make it. I've looked at people's chart of accounts where I'm just like, why do you have all of these accounts? What you really want to ask yourself when you're building your chart of accounts is, what question do I want answered? And so if you want to know, how much have I spent on marketing this year? You should have a marketing account so that you can pull out of that. If you want to know, how much did I spend on marketing versus how much did I spend on PR versus how much did I specifically spend on TV advertising, you'll need to have accounts for those. But the reality is, a lot of people don't necessarily want that level of detail. They may just want to know throughout the year, how much did I spend on any kind of advertising, period. And if that's the case, you only need one account for that. And so it can be as complicated or as simple as you make it. But to start, a lot of business owners can use some very basic categories, even just using what's on the Schedule C to start their basic idea of how I want to categorize things, and then make it more detailed as they go if they have to.
Oh, wow. Okay. Perfect, man. That makes a lot of sense, because I have seen some accounts where people are really very down to the granular, so to speak, right? And it's like, are we really tracking all that? But I guess if you are the type of business owner that really wants to know every single aspect of your business, then a very detailed chart of accounts would actually assist then, yeah?
But a point about that, if you're going to have a very detailed chart of accounts, you need to make sure that you're consistent and that every time this type of expense comes through, you put it in the same account. Because otherwise, what will end up happening is when you go to do comparisons and you try to look at last month versus this month or last year versus this year, if you're not comparing apples to apples, you're not getting the information that you need. And so if sometimes you put it in the very, very detailed account and sometimes you put it in the roll-up account, then when you want to see, for example, just estimated taxes, but sometimes you call it estimated tax and sometimes you just call it general taxes, you aren't going to see all of the numbers in the right place because you haven't been consistent about where you put them. So you want to be careful that if you want to be very detailed, that you're taking advantage of that opportunity, be consistent about how you put revenue expenses in those places so that you're seeing what you think that you're seeing.
Man, did y'all hear that? You have the detailed account and roll-up account, Did y'all catch that like I caught that? I'm just saying, man, I'm learning so much myself, and I really, truly appreciate you doing this here. So let me ask just a couple of more questions for you.
No problem.
At what point should a business owner seek to either hire an accountant or transition from either doing the books themselves or hiring a bookkeeper to actually getting an actual accountant, right? Because I'm thinking, hiring, like I know a lot of people have said I have a CPA, but they visit that CPA only once a year during tax time, right? So to me, and I guess the point I'm trying to convey here, and I want everybody to know is, there is a point where you should be expecting to spend money on a regular basis because you want to have those regular conversations with your accountant. And so from your experience, from your opinion in this industry, at what point should someone be like, you know what? It's time for me to just stop being stingy with my money. Let me hire an actual accountant because I'm at that point. So what exactly is that point?
I would say that there are a couple of points. I would say one is being real when you don't have time to do it accurately. If it's just piling up in the background and you can't take care of it, you need to hire someone. And maybe you just need a bookkeeper to help you, or maybe you need to hire an accountant to take care of all of it for you. But I have clients who have to go back and have so much cleanup work done, whereas if they had just made the investment earlier on, they could have been on top of it. And honestly, it frees you up to do what you got in business to do. I laugh a lot that Little Fish is a tiny business. We're a very small team. And when I started, I thought I was an accountant. And then I realized apparently I'm a social media manager and a website designer and all of these things. And there are some pieces that you can take and do yourself. And there are other pieces that the longer you let them fester, the worse they get. And honestly, the more you're going to end up paying. If somebody's got to clean up all of your mess for years back, it's going to be much more expensive than having an ongoing relationship with them. That being said, every business is not in a position to either need or be able to pay for an accountant or a bookkeeper on retainer. So what I tell people is start with some kind of ongoing relationship. You should find an accountant that you know and trust and talk to them at least quarterly. Check in with them. Show them your books. Talk to them about your questions. Don't wait until tax time. I mean, you know as well as I do, by the time you get to tax time, it's too late.
It's too late, yeah.
A whole lot for you because the year is over. And so if you want to know whether things are deductible, I can tell you in March to go ahead and start tracking your mileage. I can't tell you that the following January. And so make sure that you have somebody beyond tax season. And another thing is your accountant doesn't have to be your tax preparer. Some accountants don't do taxes. And so you need to have two separate people. But you want to make sure that you're having an ongoing relationship with somebody that can help you get prepared and just keep you on track. Because what you don't want is to come to the end of the year and suddenly feel like I got to gather everything up right now because, as I know, you have plenty more to do than to try to catch up on all of your accounting at one time. And so I would say when you can afford it, you should invest. and invest at the smallest level that you can afford. At Little Fish, we have hourly consults. We have monthly packages. If you can't afford the higher packages, come in and just have a talk so that somebody can get you in the right direction. Because what you really want a lot of times is a nudge and just some action steps. And you might be able to carry that for the next 3 to 6 months before you have to talk to anybody again. But you want to talk to them before you're in a place where you have anxiety about your money, where it feels frazzled. And you also want to take the time before you really, really need an accountant so that you can pick somebody that you know, that you believe in, that you trust, right, and not in a situation of weakness where you're like, I just got to find somebody. And whoever it is, I'll pay them, because they might not be the right accountant for you.
Wow. That's good advice. I have seen that people wait to that very last minute, or they wait till they get that IRS letter. Now they're in panic mode. And so they just go for the first person they call. They call their friends and find like, I need help. Can you refer me to somebody? And they be like, oh yeah, go to Joe Blow, and Joe Blow do whatever he do. And now he screwed you even more. I've seen that happen. So man, I'm glad you kind of, brought that out there, because doing everything up front, giving yourself that cushion, giving yourself that leeway makes a whole lot of sense, because once it gets to the point where it's too late, you actually end up spending more money than you actually need to. And I've seen that happen, and it was just like, wow, I'm sorry. Yeah, you could have did this yourself for free as opposed to paying that company $3,000 to do it for you. But that's exactly what happens, man. I'm glad you said that. So here's a question I want to know, like, is there any special techniques or anything simple that small businesses can do to get started until they reach that point where they need an accountant? Is there anything? And again, I'm just asking because it may not be. We talked about a lot of things that need to be done, and I agree. Just as a tax professional, the need for keeping track, the need for keeping books, the need for understanding. But is there anything simple that someone can do until they reach the point where they can get an account, like especially those who are just starting, right? They may not have that capital. They may not have enough going on in the background. They like, man, it's piling up. I need to get somebody. But if they're just starting, is there something real simplified they can do to really just make sure that they're on track?
The first thing that I tell everyone is to track everything. Every dollar that comes in and dollar that goes out of your business, you need to track. And there's 2 components that I advise as your first 2 action steps. The first, get a separate business account. And I always tell people, if your business is not incorporated or you don't have an EIN yet, that is not an excuse. It doesn't have to be at first a separate business account. Just make it a separate account. Right. So if your bank gave you a free account that you never use, or, you can just open another free checking account, open that and use that for business. That goes for other things like PayPal. If people pay you with PayPal, make a business PayPal with a business email. And maybe it's another Gmail account. It just starts with your business name instead of your first and last name. You want to keep that separate. And you want to use that newly minted business account to connect to some kind of accounting system. We talked earlier, I know plenty of people that just use receipts or just look at their bank statements. That is not the way that you want to do it. You can use anything. Wave is free. Okay. QuickBooks Self-Employed is $5 a month. You really have no excuse. And the reason that I recommend that you do that versus some of the more low-tech ideas is because it will automatically bring your transactions in. And so you don't have to remember how much you spent last week or remember to include how much you made the week before. The system is going to pull that down for you, and you just make sure it's in the right category. I recommend that every business owner, I have Finance Fridays where Friday mornings I look at my books. I make sure that everything's in order. I recommend once a week, no later than every 2 weeks. Just go in and put everything in. Go look at your accounting system and say, all right, this is how much I made. I know where I made it from. I know what I spent this on. It's not some random expense. And I think that's going to be your first step, because it's a way, one, to get comfortable with your dollars. You have a better sense of what's going in and out. You can see what's recurring. It's also a way to catch things. So you will notice as you see expenses come through, am I still using this app? Like, I pay for it monthly and I feel like I needed it at the beginning, but now I'm still paying for it. When it's going through your bank account, if you have money, you're not going to go back all the time and check to see what came in and out.
That's like my gym membership.
Exactly. So that's the first tip that I give everyone. Track everything and get a cloud accounting system. Anyone will do basically at the beginning, and just make sure that you're seeing what's coming in and out. When I say track, save your receipts. I tell people, because I'm not give me a box of receipts accountant, I'm going to go back and scan them. Open a Google Drive folder or a Dropbox and just start dropping them in there by month. And name them something that's easy. You know, put the restaurant that it was at or the Squarespace invoice that you got, so that if you ever had to go back and look for it, you're not at a complete loss. Because as you know, that box of receipts is not going to help you if you don't know what's in there.
That's true. And receipts fade. You know, you kind of put them on, you be like, I can't even see what that was anymore, you know. So
and
definitely.
They don't always tell you everything. So, you know, people bring you a receipt and I'm like, what is this even for?
Yeah.
And they're like, I don't know, I spent $100 at, Target. I'm like, did you spend it on office supply? What did you buy?
Right. And I noticed, even looking at bank statements, a lot of people are like, well, here's the bank statements. You look at a bank statement and you'll see a line item and it's just a bunch of numbers. Mm-hmm. It's like you really can't identify what that was. So therefore it becomes very difficult to categorize that, man.
And that's the reason, too, that I tell people to do it on a regular basis. I know people will say they don't have time, but honestly, if you get it in order, it'll take you an hour or less a week. And one of the reasons is what you just said. You look on your bank statement from a month ago, you're like, I don't know what I spent this money on, but you're probably not going to forget in the past 7 days. You have some idea of where you went and what you spent it on. And so you can keep on top of it before it becomes an avalanche for you.
Man, that was another good piece of wisdom right there. I like that. I think we need to create that a hashtag, put it on the shirt, hashtag Financial Friday. You know what I'm saying? I mean, because that's, in my opinion, that's probably one of the hardest things to do, again, because as self-employed individuals, as entrepreneurs, freelancers and everything, we are focused on our grind, So the idea or the concept of setting aside time to do something that's not in our lane becomes difficult. But from what you said, it's necessary. And if we can just set a hour a day, which I like that, because we need to know, okay, it's only an hour. An hour really, that's what one show on Netflix or something like that, or maybe watching Bird Box. That was everybody blindfold. I don't know. That's like the newest thing now, but I like that. Just pick a day, sit down, go through everything, because you're right. I'm guilty. I will raise my hand and say I have went back a month later and was trying to reconcile and was like, what was that? Call him out, babe, you what was this for? Like, what was we doing? Like, I don't remember. Oh, I'm gonna just put it in some category. I don't know, but I'm doing myself a disservice doing that, right? Especially if I'm really trying to grow my business and make sure that my business is profitable, making the right decisions. Man, so good there. So my last question really for you this evening is, as an accountant, as Little Fish Accounting, coming from Little Fish, what would be the single most important thing that you would want every small business owner to know?
I want you to know that you don't have to be afraid of your money. Like, one of the reasons that I started Little Fish is because I wanted people to feel empowered by it. I know that it becomes this thing to be rich enough to say, nah, my accountant handles that. I don't even have to do that. But you want to understand it. You can understand it. You not feeling good with numbers, or I'm not good at math. Like, there are so many resources that you can use that will help you along, because it's not just accounting, it's your business. It does not matter how good you paint or how nice your soap smell if you cannot make money to sustain yourself to do it. And if you can't figure out a way to be profitable so that you can take care of yourself, you can sell, like I said earlier, $1 million worth of stuff. But if it costs you $999,000 to make it, it doesn't help you at all. And so I really want entrepreneurs to know, like, there are resources, there are people out here. If you have any questions, Little Fish offers free consults to just reach out and say, hey, I just want to get somebody's perspective on where my next step should be. It won't be a full out, let's get into the details, but it's a free 30-minute call to say, where do you stand now and what are you trying to do? And I want people to know that it's accessible, and that you can be an artist and be business minded and not just throw it off to the side. And you can be an entrepreneur and be focused on your grind and doing what you're doing, and just give yourself an hour a week to make sure that your numbers are in order so you can get back to your grind.
Man, that is beautiful. But you said something that really resonated with me, because I used to be that way, afraid of money.
Yeah.
You know, I was the one. And I don't mind confessing it, because the key word was, right? The one who was afraid to look at his business bank account, who was afraid to look at the checking account, because I just didn't quite understand how things worked. I just was like, okay, as long as I can swipe it and it says approved,
I'm
good, right? You know, I'm going to make some money there. But then I had to get into that, like, no, I need to be able to plan. I need to be able to budget. I need to be able to make conscious decisions, like, there's money there, but that money is already purposed.
Yeah.
That money already has, is set aside, is planned for something. Can I use it?
Yeah, I tell people all the time, $1 can only be one place. Like, it can only be used one time. So you can't get a flush of money that pays bills and also buys you a new car. Like, it can only go to one of the two, and you need to be in a place to understand what things can wait and what things got to be paid for right now. And as long as you're afraid to look, you keep yourself in the dark, and it just, and I'm sure you have this all the time. There are so many things that people are afraid of that they don't have to be. The number of clients that have called me and told me that they had a letter from the IRS, and I'm like, well, did you call them? And they're like, no.
Right.
And I'm like, they already sent you a letter. Like, call them and find out what they're asking for, get specific details, and then I am your resource to make sure that we run this through. I want to make sure that you have the support documents that you have. But, like, if you are afraid to talk to them, they're going to charge you penalty and interest for your fear.
Yeah. Man, that's good. Because, so I hope y'all heard that, man. Fear is an entrepreneur's enemy, right? In everything.
Yeah,
definitely. In everything. If you have fear, it's going to cripple you. So, just get over that fear. Man, well, sis, I so appreciate you, man, taking your time, because I know you busy. As of this video, we are, right smack. I can say smack in the center, but starting, tax season 19 is here. And you have taken some time out from your schedule, because your calendar is booked all the way through February almost?
Yeah, we're booking in February.
Yeah, booking in February now. So, man, and yet here you are taking the time out to be here with your favorite uncle cousin, to join us on YouTube. And we appreciate it. We definitely appreciate it. So what I'm going to do is to make sure, with your permission, put some contact information about Little Fish down there so they can check it out at the bottom of the video. It will be there for them. Just to say, hey, if they have any questions, they can always leave comments here on the channel. I'll make sure they get to you. Or, like I said, I'll put a link to Little Fish Accounting down there. They can reach out to you personally. But I'm grateful, man. I thank you for being here from the bottom of my heart. This is cool. A lot of good information, a lot of wisdom, a lot of jewels being dropped, and we appreciate it.
No problem.
Definitely appreciate it. So yes, there we have it. words of wisdom from an accountant, from a CPA, been in business, has a business, doing it. I mean, she do it for the government. So got to be done right? So, good to go, man. Yeah, I think that's good to know. So thank you.
No problem. I'll be back.
Okay. Yeah, y'all heard her say that she gonna be back. So whatever questions y'all have, make sure you ask and leave in the comments because she'll be back. So
yeah, please do. I'd love to find out. I hope that this was helpful for everyone who's watching, and I would love to get some follow-up questions for what other things we could provide for you to get you the information you need to keep you on the right track.
You better be careful. They ask questions. You put it out there, you're gonna be having like a million questions in your inbox. So
Exactly.
Oh man, but yes, thank you.
No problem.